Alright, so we know we as accountants need to understand business processes. So what do we mean again when we say a business process? Business process well, basically it's a set of business activities, related business activities, generally performed in sequence, and it's going to use some kind of resources in the company to transform some kind of input into an output, adding value. So related activities, they add value. With some kind of a transformation. And they are achieving some kind of a business goal. So the IT needs to be able to track a business process and the information related to it. Alright, we as accountants serve as business analysts. So business analysis. What do we mean when we say business analysis? Well, basically, we need to understand the business well enough so that we can define requirements for business processes. And for existing business processes, we should be able to recommend improvements. So we've got a business process, related activities. They add value to the organization. Resources are consumed in performing the business process. It's transforming some kind of an input into an output with more value. And it's achieving some kind of business objective, some type of business goal. So we as analysts understand the business and what business needs are so that we can define what business processes need to be put in place, what are the requirements for those processes, and we can recommend different types of improvements. How do we determine, how do we communicate to our client organizations and other interested parties what we know about business processes? Well, we can describe it in a lengthy document, but generally, as is used in a lot of practices, we use what we call a business model. And if you think of a model, a model is basically a simplified view of what's taking place, a simplified view of something more complex. You know, you can think of an architectural model, a small-scale version of a skyscraper or a building that needs to go up. You can think of a map of a city, certainly much easier to comprehend than a written set of directions or a written set of street names and their starting longitude, latitude, etc., and which direction they go and where they intersect various cross streets. So maps are a good example of a model. Basically, a model is an abstract representation of some real-world item, in this case, a business process. And a business model is just one area of documentation that we as accountants may put together as we go in and investigate a business. So documentation in general basically explains, business documentation explains how the business works. processes, the business processes, the systems that are in place to support those processes, and it is a tool for communicating this information. And there are all kinds of documentation. So let's think a little bit more about documentation. We talked a little bit about how a map or a city could just create a giant report of all the streets and how they run and all that. Well, certainly written documentation in the form of procedures, manuals, written descriptions of business processes is certainly a part of documentation. But we also have these models, so business process models, and that is the preferred mechanism for documenting business models or business processes currently. We've been documenting business processes, for nearly a century, using a variety of means, all the way to flowcharts, from flowcharts to data flow diagrams to other types of notation. Business process models are the favored way of doing that in the accounting profession now. Product specs, org charts. We've all probably seen an org chart before. That's a simplified view of how an organization is structured. Various types of plans, mission statements, business rules. What are the rules for performing various business activities? Now, one of the most important reasons that documentation has become more important for accountants is Sarbanes-Oxley. Sarbanes-Oxley actually requires documentation. And it also requires that managers assess and attest to the controls in place surrounding their business processes. So how well are controls implemented throughout the organization? Auditors must review and opine on management's assertions. Regarding those controls. Everything the auditor does is reviewing what management is asserting. What does management say for the company? The auditor is going to render an opinion based on management's assertions. And one of those areas that Sarbanes-Oxley requires is the controls environment. What does company management say about the controls environment? And does the auditor agree that what management says is appropriate? And also, is there a requirement for enhancements to those controls? All right, so why documentation? Well, certainly is a way to support training. If an employee leaves and is replaced by another employee, it's very difficult sometimes for knowledge transfer to take place if the other employee is gone. Having a documented set of policies, procedures, information flows, and so forth can help with that. Internal and external audits make extensive use of documentation to determine how business processes are supposed to take place and whether indeed they do take place that way. They're a way of basically showing accountability. Who is supposed to do something? Are they indeed doing it? We do have standards for a lot of business documentation now. Flowcharts have been around for a while. Data flow diagrams, you'll still run across plenty of those at your clients. Business process modeling now allows us to have a standard so that one document, if you can review one document, you can review other documents. So it's a standardized way of communicating both within the organization and to external users. Such as auditors or business partners for that matter. And documentation is important because it can help with process improvement. If a process is well documented, then we're able to review it and determine, well, is it as effective as it could be? In other words, is it doing the things it's supposed to? Is it efficient? Are there some glaring redundancies that we can see by viewing the documentation that can be eliminated, that we might not see if we're just talking to people and walking around and following processes? Documentation can help us get a better view of the internal controls surrounding a process and whether the process is actually in compliance with requirements. Alright, so documentation can take many different forms. One of the forms we talked about and one that we're going to be exploring more in this chapter is business models. So why do we need business models? What's the value of having business models? Graphical representations much like we saw with a map, a street map, it's concise. The old adage goes, picture is worth 1,000 words. Well, a graphical view of a business process can present in a concise and clear manner in a sheet of paper what's taking place in the process. Much more so than a written description. One other way business models allow us to basically manage complexity by, at higher level views of the process, only focusing on the essential activities, not all the exceptions, not all of the errors that might pop up, but just, what is the basic gist of this business process? If we understand business processes and have a model of maybe how a process should take place, then we can more effectively interview. It's a good basis for interviewing participants in the process. So we know to ask for the activities they're doing, maybe see if they are performing all the activities they're supposed to be doing, etc. It's also a good reconciliation tool. Once you have interviewed a number of different people about a business process, you'll probably find that the story is slightly different. So as you start putting all of their stories together, you come up with this model, which you can then revisit with the participants and then come to a cohesive understanding of how the business process actually works. You can also evaluate potential changes. By making changes to the business model and maybe simulating what would take place using a new process or a slightly changed process. And of course, a process model is a good basis for determining requirements. One of the things you want to do when you are documenting a business process is consider how that process is set up. And there's a structured approach you can take to doing that. So let's consider that briefly. Steps in documenting a business process. Well, first, you need to discover the activities that take place. What are the various steps that take place? And you want to think about how would you discover this. There are a number of different ways that you can discover what activities take place in a business process. The company may already have documentation in place that you can review. That's one way. Or partial documentation. They may have a written description of the activity but not a graphical depiction of the activity, or vice versa. You can walk around and talk to various parties that are involved in the process to determine what takes place. A third one is you can just sit down or walk around and observe the process as it takes place and record what happens. So you're going to discover all those activities that take place. So we'll call that 1 instead of dash. So another thing that you can do is, once we have discovered which activities take place, is list them in sequence. What order did they take place in? And unfortunately, you may not always discover them in that order. So being able to organize them in the order that they're performed is important. What are those activities? What are the steps? Activities, steps in sequence. Third, you want to determine who or what performs each activity. And this is important for some of the types of diagrams that you may want to put together that actually have areas of responsibility within the diagram itself. So what's the input? Who creates it? What's the output? Where does it go? So the fourth step in documenting a business process, and this is certainly especially important for DFDs, data flow diagrams, but it's probably useful when evaluating an entire business cycle and determining where one business process ends and the next one begins. So group activities into logical chunks. of activity. So which ones occur around the same time? Or do they just naturally go together? So as an example, you've got the expenditure cycle. The expenditure cycle could be seen as one giant business process, but we typically group it into smaller business processes such as requisition, purchasing, accounts payable, cash disbursements, vendor management. Those groupings help us identify where specific business processes begin and end.